What is going on, traders, and welcome back to the channel. If this is your first time here, welcome. I'm glad to have you. Now in this video, I'm going to be going over my watch list for the trading week of June 20th, 2022. Let's get to it. All right, catalyst for this week. Jerome Powell is speaking in front of the Senate on Wednesday at 9:30 a.m. and he'll be speaking in front of the House on Thursday at 10 a.m. We always want to make sure we're aware of when he's speaking because he can introduce some volatility into the market, and we always want to be aware of that. Also, May home sales will be out this week, and also June Consumer Sentiment Index will be reported on Friday. All right, let's go ahead and take a look at this week's earnings calendar. All right, so this week it looks kind of light. I am going to be watching Winnebago, Accenture, FedEx, and Darden Restaurants, but I think only FedEx made my watch list for the week. All right, so let's go ahead and get started. All right, so since the market has been moving kind of crazy, I feel like it's easier to track an index rather than any individual stock. So we're going to start off with the QQQ, the index that tracks the tech sector. Now here I have it pulled up on the weekly chart here. Now this consolidation range that I marked off here was back from September of 2020, and we revisited this level last week. It also created a spinning top candle for the week, which indicates indecision. The market doesn't know which direction it wants to go. So let's go ahead and zoom in a little closer on the 4-hour chart and take a look. Now you can see that it did swing down into this consolidation range, but it started to curl back up. So the first one we want to look at is the bullish scenario. Now, if the market decides it wants to run a little bit, the first level that I'm looking for it to test is around $280, $281. If it can get through this level, the next level that I'm looking for it to test is around $286 to the upside. All right, now if the market decides it wants to sell off like it has been, it's been popping in the morning, then doing a slow fade afterwards. So don't be surprised if you see it pop in the morning and then start to slow fade down. Now, if it can't hold this $273 level, I'm looking for it to get within this range here. And if it can't hold the next level to the downside, so this is the bear scenario, if it can't hold this $269 level, I'm looking for it to continue to drop and may even get all the way down to around $260 this upcoming week, okay? So keep QQQ on your list and let's see what happens. All right, so the next index we're going to be taking a look at is the SPY that tracks the S&P 500. Now here I have it pulled up on the 4-hour chart. Zoom in a little bit. Now you can see these gray areas right here are gaps that the SPY needs to fill. Now right now the SPY is sitting around $366, and for the bullish scenario it has to get above $367. If it does, then the first level that I'm looking for it to come test is the bottom of this gap, which is around $371. If it gets within this gap, it could run all the way up to $378. So that's the bullish scenario. Now, if the SPY opens below this $367 or gets rejected by it and starts to come down, the first level that I'm looking for it to test is around $359 or so, $358, $359. Now, if it gets within this range, the SPY could come all the way down to as low as around $350, okay? So keep these levels on your watch list and let's see what happens. All right, and the last index we're going to be taking a look at is the Dow, ticker symbol DIA. Now here I have it pulled up on the 4-hour chart, and just like the SPY, you can see it has 3 gaps that it needs to fill. So first off, the bullish scenario. Now if the Dow right now is sitting at around $299, now the first thing it has to do is get above and stay above $299. If it can do that, then it needs to come up and try to fill this gap. The bottom of this gap starts around $301.75, and the top of this gap is around $306.50, okay? Now if it can get through this gap, the first level that I'm looking for it to test is around $306.50. If it can get through this gap, the bottom of the next gap is around $309.50. All right, now if it can get in this gap, it's going to try to fill this gap, and the top of that one is $314.50. Okay, so that's the bullish scenario. So you just watch this, and every time it tests a level, if it breaks through, then you look for the next level. All right, so the bearish scenario, if the market decides it wants to sell off, now if the Dow cannot stay above or opens below this $299 level, and it gets rejected by it. The first level that I'm looking for it to come test is around $295.25. If it cannot hold this, then it's going to get in this consolidation range right here, and it can drop as low as around $288.75. Not sure if I showed you where this consolidation range came from. All right, so this consolidation range came from back in January of 2020. All right, so this is the level that I marked off. Okay, so keep these levels on your watch list and let's see what happens. All right, and the last one we're going to be taking a look at is FedEx, ticker symbol FDX. Now here I have it pulled up on the weekly chart here to show you FedEx had a great week last week. This really big green candle is because they announced that they were increasing their dividend by more than 50%. That news made the stock run all the way up to as high as almost $240. And of course, that kind of move created a gap. So let's go ahead and zoom in on the 4-hour chart and take a closer look at this. Now you can see it get all the way almost up to $240, and it did gap down a couple of days later, and then it started to run back up. Now what I'm looking for is for the euphoria for this dividend to wear off, and it starts to drift back down and fill this gap. Now the ex-dividend date for this stock is this upcoming Friday, the 24th. Now it's possible that a lot of these people who bought in on this will sell right after on Monday morning or afterwards, and this stock could come down and fill this gap all the way back down to around $203. Okay, so keep your eye on FedEx and see if it drifts down over the course of the week and test this $219 level. If it bounces, then you can play it to the upside, but if it gets in this gap and continues to drop, I'm looking for it to come down to as low as around $203 by next Monday or by the end of next week. Okay, so keep this one on your watch list and let's see what happens. Okay, so one note I wanted to point out, I did give you levels for the QQQ, the SPY, and the DOW. Now if the ticker that you're looking to play is included in one of these indexes, you may want to consider having two charts open, one with the index and one with the ticker that you're looking to play. And if you see any correlation in the price movement or the price action in one or the other, then you can make a decision whether you want to play it to the up or to the downside. All right. And with that, this is the end of the video. And if you found value, please smash that like button and consider subscribing. Here's wishing you a prosperous week of trading. And until next week, talk to you later.